Hello everybody and welcome back. In this video I want to talk about PayPal. Is this an undervalued company and is this worth a buy right now because the company is doing a lot of buybacks and is fundamentally sound, or is this a value trap with growth that is declining and with a lot of competitive pressures in the future? So am I going to buy PayPal? Maybe the stock is too cheap to ignore. What is my opinion on PayPal? This is what we are going to talk about on this video, because a lot of you in the comment section below have asked my opinion on PayPal. Have you talked about PayPal? Here is the comment from Didi Dodo. They are 25% cheaper than Adobe right now and doing very aggressive buybacks. These two companies deserve a re-rating. Could be worth a video. Your thoughts about PayPal? Can you make a video comparing the different payment opportunities? And some people are sharing their opinion. Some people compare Adobe to PayPal. So I wanted to make this video to tell you what I think about PayPal, because right now I am not invested in PayPal. But it is true, the stock has dropped a lot. Maybe it is getting enticing. So I think we can start. And the stock looks absolutely terrible. Right now, it looks like a value play. It looks like a turnaround play. It looks like a good value investment opportunity. So yeah, I understand why people are buying PayPal right now, because it's maybe getting too cheap to ignore. In case it is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of roughly 25% per year. And to be honest, I did not make my 25% per year by investing in value companies like this, value investing companies. I invest in quality companies that have a moat and they have a re-rating. If you look at PayPal, you all know this payment company. It's a company that is growing. You look at the fundamentals, we are pretty fine. Revenue is up and to the right. Net income is up and to the right. They don't have much of a debt problem. They are generating cash flows every year. And now the stock is dropping a lot, so they are repurchasing their own shares. It sounds like an efficient company with a ROIC above 20%. So why is the stock going down? People start to worry about competitive pressure. If you look at the operating margin of the business, it seems like the operating margins are going higher, okay? No big worry. And now I want to show you something else. The transaction take rate. So the take rate, the fees that PayPal has for every transactions. 10 years ago, it was above 3.3%. That means fat margins for PayPal. And over the past couple of years, because of all the new competitors that came in this market, they were not here 10 years ago. Well, because of all these new competitors, the take rate has been going down and down and down and down. From 3.3 to 3% to 2, 2.5 to 1.7%. I don't like this, actually. Let me start this video by saying I hate to see this as a potential shareholder. I don't want my business to be deteriorating like this. So you have more competitors, like, I don't know, Wise, for example, with international payments, different platforms, and it seems like PayPal is not winning this battle. And I've been following PayPal for a couple of years now. And I remember it was 1 year or 2 years when the stock was going down a lot. The CEO made a huge announcement. The stock of PayPal went up massively during 2020, 2021, and then went back down. And after some months, the CEO made a huge announcement that would shock the world. What did they announce? Nobody remembers, because it was a lot of words, but nothing burger. Some AI integration, new software tools that were supposed to shock the world. Well, nothing shocked the world. And since then, all the PayPal shareholders are asking the CEO to ramp up buybacks, to do something for the stock, because the stock has been doing nothing for more than 3 years now. And since the past 3 years, you have this trend that is not good.
By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video.
Something else that is not good is the deceleration of revenue. Something I don't like to see actually. In the past, you had a business that was growing 10% per year, 20% per year. And then, since 2022, the growth rate has been 8% per year. It should be fine, right? If a business grows 8% per year for 5 years, 10 years, and if at the same time they are doing buybacks, this is fine. But what I don't like about PayPal is the growth rate is not stable at 8% per year. It is actually declining. So it seems like PayPal is fighting back, but I don't know about the resiliency of this growth rate. If you look at the quarterly data, this is what you have. The business went flat and then the growth is back a little bit. If you look at the last 12 months, the chart doesn't look good. You have revenue that is decelerating and decelerating and decelerating. You don't have the same chart for Adobe, by the way. For Adobe, you had a growth rate that went from 20% to 10%, and then you are dead stable at 10%. So a little bit different here. I find a difference here when it comes to the growth rate. It seems like PayPal has a growth rate that is more volatile. Why is the revenue stable in Q1 2025? Why is it rebounding? What did the business change in a couple of quarters? I don't like to see this. What I would love to see is a stable revenue growth rate or an increasing revenue growth rate. That would shock the world and that would be a catalyst for the stock price. But anyway, now you have a business that is growing revenue at 7-8% per year. And what is great is they are doing buybacks the smart way. They are using all the cash they have, all the cash flows they have to repurchase as many shares as possible. So you have a buyback program of 5-6% per year. Okay. Let me show you now the amount of cash flows they have. This is their free cash flow and the buybacks. That should be it. That should be it. Wonderful. So as you can see here, in orange, this is the free cash flow of the business. In purple, these are the share buybacks. In the past, the company was not a fan of doing buybacks. But then the stock has dropped so much, they are allocating the majority of their free cash flow to do buybacks. I can show you an even better metric, a custom metric that I have created on Fiscal AI that is called the buyback to free cash flow. How much of your free cash flow are you using to do buybacks? You see that this trend is accelerating. On an annual basis, this is what you have. On a last 12 months basis, this is what you have. Which means for the past few quarters, actually since 2022, the business is reallocating roughly 100% of the free cash flow to the buybacks. The management is literally telling the world, we think we are cheap. By the way, you see me navigate in this wonderful website, Fiscal AI. This is the only website I know where you can create your own custom metrics like this. You can use my link in the description to create your own account. You will get a discount 15% cheaper, and you can also test the website, try the website 2 weeks completely for free without putting your debit card. So actually it's great, and you can test this website. So you have a business that has decelerated. You have a business with structural disadvantages because of new competition, new competitors, and transaction take rate that is going down. But the business is cheap. The questions all the shareholders want to answer are: 1, can PayPal be disrupted by competitors? Or can PayPal survive because they have so many users? As you can see here, for the KPIs, you can check the number of transactions, active accounts, new accounts, number of transactions. You can see these charts. Okay, let me first show you the number of active accounts. That is 430. You can see the growth rate of active accounts. Okay, I want to show you some specific things so you understand very clearly my point. In the past, during 2021, the number of active accounts was growing at 10% per year. And then since 2022, you have no new accounts. Nobody is really joining PayPal anymore. So it's like Peloton, you know, when during COVID, with their electric bikes, with an iPad on the bike at home, people joined a lot. Same thing for Zoom. You had the growth rate that was immense during COVID, and then after COVID, no new users for Zoom. Nobody joined Zoom. And because you have no new subscribers, accounts for PayPal, the only way PayPal can grow revenue is by monetizing its actual audience, its current audience. How is PayPal monetizing its current audience? They are doing some partnerships, but I'm not sure of the resiliency of these measures actually. What is also pretty disturbing for me, and it is the reason I am not invested, is the number of transactions. You can see in the past, the number of transactions on PayPal, it was growing 20% per year, and then 15% per year, and now decelerating. Now declining actually. It's not decelerating, it's declining, which is quite disturbing. For some reasons, now the number of transactions is going down. Why? This is a good question. Many reasons, and my guess is more competition. So I have several proof, several evidence that the competitors are eating PayPal's lunch. Now the company was supposed to shock the world. They are not shocking the world for the moment. Now they are using all their cash not to reinvest in new opportunities, but to do buybacks. So in the next 3 to 5 years, what will PayPal look like? Will it thrive? Can it really fight against competitors? I'm not sure. So the reason I am not invested in PayPal is because it falls into the too hard pile. I know a lot of people are invested in PayPal because this is just too cheap and it will rebound. The number of transactions will rebound eventually. They can monetize their user base, and now the company is just a screaming buy because of a valuation. If you look at the P/E ratio, price to free cash flow, this is what you will find. I agree, the company is really, really cheap at the moment. You have a P/E ratio at 11, price to free cash flow of 9. So how low can it go? At the end of the day, the company is not declining. The company is growing a little bit for a price to free cash flow of 9, and they are repurchasing 6% of their shares. It seems like the golden value play, right? So what is the yield you want out of PayPal? If you are growing your revenue by 5% per year and you're doing buybacks of 6% per year, that's an 11% yield. So if you invest in PayPal right now, you can expect 11% shareholder yield. Add to this a little bit of efficiency because the margin profile is increasing. I can show you this. I can show you on ratios, margins, net margins. I can show you that the margin profile is increasing a tiny bit. Okay. Quarterly, no, last 12 months. That will be better, easier for you to understand. Look at this. In the past, PayPal was having a net profit margin of 12%, and then 13%, and now 15%. Maybe they will continue to gradually improve their net margins from 15% to 16%, despite the lower take rate. So yeah, they are doing some things right. You can have a 11% shareholder yield, maybe a little bit more, almost for guaranteed. And then if the company rebounds for some reason, if the revenue re-accelerates for some reason, you can get a beautiful re-rating. So on a safe scenario, bear case scenario, you can make 10-12% per year. And then if there is a rebound, if revenue reaccelerates, you can make more than this. These are the arguments of the bulls. And if you want to be a bull, I would say, do you have the conviction? Do you really know when or if the revenue will rebound? And to that, I don't have an answer. So what is my opinion on PayPal? It's out of my circle of competence. It's too hard. I only see people that compare PayPal to competitors. And even on a personal basis, I'm biased, obviously, but I am no longer using PayPal because of all the extraordinary fees we have. And I have received a comment a few days ago, somebody else that had the same situation. This comment, if I may compare Wise and PayPal as a freelancer working from Europe for the USA, $1,000 received on PayPal, you have many fees. That's a 5% international fees. I know this, I've worked online as a freelance analyst for accounts abroad. PayPal takes a 5% fee for international payments. And if you do the same transaction with Wise, you have minimal fees. And actually, PayPal doesn't have a good spread for different currencies. Wise has a very good spread for currencies. Minimal fees and better adjustments for currency. We are in 2026. We deserve good fees. We deserve good treatment for different currencies because we live in a digital world. Well, PayPal has not received this notice because I just checked the fees yesterday. The fees for PayPal are still too high compared to competition. So from my own point of view, maybe I am wrong, right? But this is my opinion. From my biased opinion, PayPal is not aggressive enough to cut their fees. And if they want to be aggressive enough to cut their fees, they will lower their transaction take rate. So they will decrease their own profitability. So either you continue the same route with the same fees and you grow a little bit, or you become more aggressive to compete with smaller companies, but you may hurt your profitability. In these two scenarios, I'm not comfortable. And I don't think the business can reaccelerate massively. I don't see any catalyst for the moment for the stock to re-rate. So maybe in 2026, they will implement a new thing. Maybe in 2026, they will have a huge difference, huge AI implementation. Maybe in 2026, the CEO will actually announce something that will shock the world. But for the moment, I am not touching PayPal. I want to fill my portfolio with companies with visibility, sustainability of a moat, and I don't see the sustainability of this moat. I think the moat is eroding quite fast, and so far, this trend is continuing. Competitors are coming, competitors are hungry, and for all these reasons, I am not touching PayPal stock. If you are a shareholder, I understand all your points. Good luck to you, but this stock is not for me.
If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.